The broadcast is now starting. All attendees are in listen-only mode.
Well, good morning. Good morning, everybody. Thank you for joining us in our today tax reform presentation. We're just going to wait a couple of minutes to see if we can get a little bit more people. Everybody is getting registered. So we'll give it a couple of minutes, and then we'll just get going. Very well. I think that this is a good time to get started. So again, thank you everybody for joining us in our Mexico 2021 tax reform presentation. I really hope that everybody is doing well and keeping safe. I know we're living in a very strange world nowadays, so stay safe and be good. So, as you know, Mazars, Jose Luis, if you can jump to the next slide, please. So, Mazars is an international firm, and we are in 90 countries around the world. We gather about 40,000 professionals in all these countries, 24 directly through Mazars, and 16,000 through our alliance of Mazars North America. So, again, quite a big firm around the world. We provide audit, tax, and advisory services. So thank you very much again for being with us today. So the tax reform that we're going to be talking about today will include, Jose Luis, if you can jump to the next slide. The tax reform, next one, Jose Luis. Thank you. The tax reform, here's the what we're going to be talking about. So we're going to be addressing the revenue law, the income tax law, the value-added tax law, and the tax code. It's going to be very important that there are certain items that we're just going to be scratching over the surface. So one of that is obviously the outsourcing bill that is right now in Congress about to be approved. So because we don't know much about this new bill and how that is going to work out in the next few weeks, we're gonna scratch the surface on what that could mean. But eventually, we want to do a sole webinar where we can talk about that and what options the different companies can have in transitioning to something different and out of this insourcing and outsourcing structure. The other one, as you know, is the brand new for 2021 is the reportable scheme or reportable operations or reportable transactions. So this is also very new, and although Pepe is going to scratch the surface of this as well, we're going to have another separate and webinar where we're going to be talking about this reportable scheme. So please stay tuned on the next few weeks to hear more about this and for coming webinars on this section. So now I'm gonna go ahead and introduce our panelists of today, my colleagues, Jose Jimenez, our tax director, Omar Garcia, our tax partner, Jose Luis Sierra, one of our tax managers. So very knowledgeable team in all these areas. So again, welcome in. Jose, please, the mic is yours.
Thank you, Raul. Thank you for that good introduction. So going forward on the agenda that we had, let me just give a very fast background on how the bill for the reforma was submitted or promoted by the parliament. And well, just to give you the background, in September 9th of 2020, the Mexican president presented the 2021 economic package that includes the tax reform. Usually, and when I say usually, as you can see in the PowerPoint slide, the bill was approved until December 2020, almost 3 months after the president promoted the economic package. So it was, why does it take too long? Usually this was approved, and I don't know if you know it, but Mexican parliament is in the same party of the president. So when we have these kind of scenarios, the majority of the parliament, as is from the same party, it's very common that it's a fast track, you know, that they approve the reform or the package very quickly. But as Raul mentioned, and Omar will mention that at the end regarding the outsourcing, in the process of approving the new reform, then there is this initiative to reform the labor law in Mexico, where they want to delete the outsourcing scheme or modify the outsourcing scheme. So they identify that if they do that in Mexico, we have laws, especially in the income tax law and in the VAT law, that are supplementary to the labor law. So they need also to amend or to reform the VAT and the income tax law. So they put, you know, a break on approve it. But since the companies and all the chambers make a lot of pressure to the government about the labor, and actually they still talking about that, government has opened the door to discuss what will be the labor reform. So they put the brake on that, and that's why when they identify that it will not be an easy way to approve the labor reform, they decide, let's approve the VAT law, the income tax law, and the federal fiscal code on what we had. They were actually minimal changes from the promoted to the approved, because in the past time the government can change the initiative with the parliament, so it's not very material the changes that they had. So they approve it, but just for you to know, and this is something that we will complement at the end, as I already mentioned, it is highly possible that if the labor reform it's approved, then something in the VAT law and the corporate income tax law has to be amended. And I will give you a little example. I think everyone is aware of the VAT withholding that we have since 2020 for the outsourcing services or in-sourcing services, that if you read the provision in the law, it never says outsourcing or insourcing, but the description of that activities carried out are very similar to an insourcing. So if that happens, we are sure that they will delete the 6% withholding of the VAT that we have right now. So that's something that will happen in the following months. I don't know what, maybe they will approve the labor law with any change, or there will not be any amendment, and it will begin in force in 2022. We don't know, and that will be something that we will discuss in the following slide. So that's the background on how the process of approving the tax reform of 2021. Going forward, also it's important for you to know regarding revenue law and also the economics indicators that we have in 2020 in Mexico. As you already know, and I think this is very similar in other countries, or GDP was decreased. This is the first years in many years in Mexico that we have this. So there was no growing in Mexico. On top of that, we are decreasing or growing by 8.6%. Of course, everything is related with COVID-19. That's the impact on the economy that this had. And also, the government have a projection for 2021 of 4.6%. I will say that is very good. I hope we can reach to that. But as you can see, we are in January, almost February, and here, especially in Mexico, cases are not decreasing. We're in the peak, and every time we have, unfortunately, more people sick and dead. So we are not getting the vaccine as fast as we thought we're gonna get. So we don't know what will the project. I hope we get to that number. Regarding the inflation, we closed 2020 with 3.15%, and also for 2021 the goal is 3%. We closed an exchange rate 19.9847 pesos by each dollar for 2020, and these are US dollars, just to specify. And for 2021, the expectation is that we had 22.1 pesos by each dollar, so it looks like it will not be a big increase. That's good also for us in Mexico. Regarding the financial system income tax withholding, just for you to give you a background, in your bank statement, when the financial institutions pay you interest, then there is a withholding of corporate tax. This is applicable for individuals and also for entities in Mexico. So the withholding decreased. If you can see, when in 2020 there was a 1.45% of withholding, and for 2021 it will be 0.97%. Storage charges keeps the same as the last year. It's a 1.47 by month. This is as a monthly surcharge. So this will be when we pay late taxes, this will be our interest that we will need to pay every month. In the revenue law, there are some incentives that are given to certain kind of industries, and just for you, that there were no any change. The only change that we have comparing for the 2020 revenue law that we have is that there is this biodiesel incentive. If you are not familiarized, in some industries are allowed to credit the excise tax that we pay on this kind of diesel or gas. So each peso that you pay of this excise tax is allowed to credit your corporate tax, right? So there is a provision in the corporate tax law that say that when you have a tax benefit or a tax incentive, you need to consider the amount of the incentive also as a taxable income in some scenarios. So for this incentive regarding biodiesel, they specify that because since this incentive is not in the corporate tax law, there was this misunderstanding, or it was not very clear if we need to consider also the incentive as a taxable income. So they include that provision in the wording on the revenue law, where they are saying now that if you have this incentive, you need to consider this incentive as a taxable income in your corporate tax return. And I think here, Jose Luis, I will pass you the word. Let's jump into the income tax law. That there are some changes specifically in companies that are not profitable. Maybe there are not many foreign entities that are operating in Mexico in this way, but it's important for you to know, because also have in mind that you have the possibility to deduct donations to this kind of entity. So there are big changes here, because government identifies that unfortunately many taxpayers are using these kinds of let's say tax vehicles to operate, and trying to, how can I say it, trying to act like if you are not profitable, but backgrounds everything is profitable, right? So they are putting these laws regarding this kind of entity. So I give you the word, Jose Luis, go ahead.
Okay, thank you, Pepe. So thanks once again. And well, as Pepe was mentioning, one of the main changes, but now in the income tax law that we saw after this reform, it is precisely under this chapter that covers all the non-profit legal entities or organizations. And pretty much these chapters explain to us and give us the list of all those entities that are not being considered as taxpayers for income tax purposes, and they can be employer and parent associations, charity entities, professional organizations, among others. And it as well, this chapter explains to us how we can apply to be an authorized donee and how we can receive tax deductible donations. So this being said, well, what does these changes mean? Pretty much the main ones that we see it is that from the list that we already have from non-profitable entities, well, they include that these 4 specific organizations that are dedicated to the scientific and technological research, those that grant scholarships or that are dedicated to investigation and conservation of the nature and species in danger of extinction, that these kind of entities or organizations now can be considered as authorized donors. These were already in the law as non-profitable legal entities, but now they can apply to be an authorized donor, of course, prior to approval of the authority. And it is going to be important because these kind of entities and organizations, they already existed, so they can now apply to this new filing of being an authorized donor. And this is already into place, but they have, as we can see here, a transition period. So this will came into place effectively in July the 1st, 2021. So what does this mean? We can see that, as Pepe were mentioning, where the authority is trying to have a more strict control of all these that kind of entities and organizations in order to prevent an abuse of these schemes. So that's why they will need to ask for this authorization to the tax authority so they can be an authorized donor. And well, this is pretty much to prevent any kind of fraud, to comply with anti-money laundering policies that the authority having to in place, and so on and so forth. Some other changes that we also see on this specific chapter, it is that, for example, one of them that I think that it is an important one, it is that prior this reform, these kind of entities, being authorized donors or not, pretty much all the legal entities that are non-profitable, they can consider as deductible all those expenses as up to 2,000 pesos, even if they have a simplified receipt. So the change that we have now, it is that the authority is saying, okay, you can still be in a non-profitable entity, but for all your expenses, you will need to have an CFDI, or what it is known here as the tax invoice, even if it is below the 2,000 pesos threshold. So this, once again, it is in order to have a more strict control over their expenses and to prevent an abuse of those kind of benefits that they have. So prior to this reform, as of 2020, all these entities can consider as deductible expenses and payments, even with a simplified receipt, that it is not a tax invoice for tax purposes. But now on, starting on 2021, they will need to have this specific CFDI. Another important part of the chapter, and that I think it is one of the most extensive and that it is going to be one of the most important ones that have changed, it is that the tax authority is now including, for all those entities that were already authorized donors, it is including a specific scenario where they can lose that authorization. So this scenario, and I don't want to get technical on this, but pretty much what it says, it is that entities that are not being a profitable entity or that are not being considered as taxpayers, they can have incomes, of course. They can be donations, they can even have other kind of incomes, but of course the main purpose of these entities, it is going to be to obtain donations and to make an operation that it is not commercial operations. So if they have incomes that are not related to their purpose, now the tax authority is saying that if those kind of incomes that are not for those that for which they were authorized as donors, if they exceed the 50% of the incomes of the company in any given year, well, they are going to be losing the authorization of being an authorized donor. So we have actually a specific, we can say, calculation for this, and it is that you can still have, because it is something that happened, other incomes in the company, and as of the 10% of those incomes, these authorized donors are not going to be paying taxes. So if you have other incomes not related to the activity, the 10% of those incomes that are other kind of incomes are going to be tax-free, pretty much. From the 11%. Yep.
Just to complement what you said, because that is very important, and I think this was the main reason of this change, is that before this reform, unfortunately they were taxpayers that abuse of this scheme, where they say, if I am if I'm a non-profitable entity and I can become a taxpayer under that chapter, I can apply 10% of my income will be not subject to taxable income because I have that exemption just by the fact that I'm in a not profitable legal entity. So many companies have more than 50% of their income not related with profitable things. And let's say an example, if I'm a school who receive donatives and I have, a library and I have a convenience store, and the sales that they have there, sometimes they were more profitable. Let's put an example. Of course, that will not be the case, but if that is more profitable, that they're giving the education for free or giving medical care, so they abuse about this scheme. So what government say, okay, let's keep the benefit, but I will put another lock to this provision. And the lock will be, if you have more than 50% of your income not related with your not profitable operation, you will lose the authorization, because I identify that you abuse of this scheme. So this is related with that, and that's why they add this new threshold about the 50% that you need to respect. So in all the cases, we need to be monitoring our incomes regarding other transactions that we have, comparing with the full income of the entity. So that's the main reason of the change, right?
Yep, that's correct. I completely agree on that. And it is, as you mentioned, pretty much to prevent an abuse of this exemption of the 10% of the income. So they are now saying, okay, if you have more than 60% of other incomes, you are going to lose the deduction. And another important part that they are also considering that this will trigger, it is this precisely third point that I add here, that once the authority have identified that you exceed the 50% of income for other activities besides the one for which you were authorized, you are going to lose that deduction. So what happened now that you lost the authorization? Well, it will represent that you, as an authorized donee, will have a period of 12 months to transfer all the equity and the assets that you have to another authorized donee. So this will represent that if you lost the deduction, and this is something that they will need to keep into consideration, if you lost the deduction, if you exceed this threshold that Pepe was mentioning, you will need to transfer all your equity and assets to another authorized donee. So this is also important to consider. It will be, well, issuing a CFDI, a specific CFDI for that transfer, that it is not going to be deductible for the one entity that it is going to be receiving that equity or assets. So it is pretty much for supporting the operation. So another part that we have seen that have changed in the income tax law, it is also regarding another chapter of this law, that it is particularly to individuals that obtain their incomes for personal or independent activities, or those that carries out business activities. So pretty much what this new change it is saying, it is that prior 2020 and still now, these individuals have a specific benefit that says that they can opt to ask to their employer that he is the one withholding the income that they are perceiving and filing that to the tax authority. So there, as individuals, are not going to be obligated to file their monthly and annual returns, as well as other informatives that might be applicable. So in this case, the change that we see starting in 2021, it is that the authority, it is as well as in the previous slide that we were seeing, it is adding a specific threshold of 75 million pesos. So if any individual exceeds that amount of income during the year, well, they are not going to be subject to apply this benefit. So they will need to inform to their current employer that they are going to be exceeding that threshold. So now, and the moment where they exceed this threshold, that actually it is a pretty high threshold, and as well as Pepe was mentioning, it is to prevent an abuse of the scheme, they will be obliged to file their own annual tax returns, their monthly tax installments, to pay the taxes directly as individuals. So this is the main change that we have seen here. Considering this threshold, it is unlikely that we are going to be seeing these this application of this threshold in a regular basis, but it is important that we keep it into consideration as well.
Also, Jose Luis, I think that just for you to know, I hope I can get that threshold, but we are talking about almost $4 million. That would be like the comparison of what these have. In my experience, to be very honest, I have never seen a company to withhold under this scenario, but they might be, right? And that's why Mexican tax authorities identify that if you are having this kind of income, it doesn't make sense that you are being withheld when you have the full responsibility to pay the taxes as an individual. You are almost as profitable as a corporation. So that's the main reason of this. So that's a high threshold. If you have an individual that has the situation and inform you to withhold, and you know that it might have this possibility, of course, this obligation of the individual, because you cannot know what will be the income on other companies he will have. So it's a responsibility of the individual. Companies will not have any exposure on that. The liability will lead on the individual. So it's good to know, but as I mentioned, I don't think we will have many scenarios like this one.
Yep, I agree with that.
And I think this is mine, right?
Yep.
Talking about digital services, as you are aware, in 2020, we have a big reform in Mexico regarding digital services. And what usually happens is that, especially individuals in Mexico that are working, and let me give you an example. If I'm a Uber driver, if I'm a Uber Eats delivery guy, and also if I'm a guy selling through Amazon or through eBay, or I don't know, any of these stores that they have, there is depending on the situations, it is supposed that these kind of corporations that are not resident in Mexico, because the treaties and the activities they are carrying out in Mexico are rendered from abroad, because they have a digital platform that allows them to do that. Mexican tax authorities give them the obligation to withhold the income tax of the payments they have done to those individuals that are getting money from that platform. And why they do that? Because government identified that Uber drivers or individuals selling to these platforms are not paying taxes, right? That they keep the money in the bank accounts, that they don't care. So a way to formalize or to have more taxpayers and everything was using these kind of platforms. So foreigners has to came to Mexico, get a tax ID, and withhold and pay those taxes to Mexican tax authorities. In 2020, it was the first year that we had that. And the way to determine, in this case, we are talking about income tax law for the individuals. The way to determine the income tax, it was very similar to us. Let's take as an example, when you pay salaries, we have a progressive tax, right? When you have a bracket, depending on the income earned, you will apply the rate that is in the bracket that correspond to your taxable income. So it used to be like that. Like, for example, if I'm a driver and I earn 20 a month, I will be withheld by 3%. Or if I have a higher income than that, it would be 3.5%. So they identified that for the digital platforms, it was very difficult, because imagine how many drivers they have. Even though everything is digital, they identify many mistakes and many amendments, because the system was not that great, or it was complicated to have a perfect, way to determine the tax. So they simplify the process, and what they do say, let's keep it simple and let's just have a flat rate. Like, for example, regarding being a passenger, Uber driver, you will be withheld only by 2.1%, and that will be the flat rate. It will not be anymore a progressive tax rate. Lodging services that I always tell, this is Airbnb services. If I have an apartment, I put it in Airbnb and someone leases it for a weekend or for a month, the income that I will collect for that, that it will be paid by the Airbnb will be withheld by 4% of that amount of transactions. And the sale of goods and rendering of services will only be 1%. So if I am selling through Amazon, every time I have in mind that this is only applicable for Mexican tax resident individuals who are selling to a Mexican client, because now, and this is getting more and more confused, I don't know if you are familiarized, but now with the new NAFTA, or let's say the new, I always forget the name of the new treaty that we have. TMEC is now what we call, I remember, is now you can sell something on Amazon in Canada and have next day delivery or 2 days delivery in Mexico City, because now everything is so connected that it's very easy to do that. So if I am selling through Amazon to a Canadian guy, then it became complicated to Amazon to tax that income, even though that part is something that we're still discussing with Mexican tax authorities, because in fact, if the store who is selling those products is the Mexican Amazon store, for us it's evident that a withholding has to be performed because there is an income. So those are the kind of scenarios that are changing for digital services. The next one, let me see if is the sanctions. Now have in mind, and this is something very important, because it is supposed that if you go now to the Mexican webpage tax authorities, they issue all the digital platforms that are registered before Mexican tax authorities. As December, that it was the last one that they published, they were approximately 120 digital platforms registered only. So if you are a service digital provider, and that's additionally something that you need to review, because there are many doubts that we have. Like imagine if I'm a software developer and I'm just charging SAC, software as services, that will be considered a digital service. So those are the kind of analysis that you need to carry out to be sure that you don't have that risk. Because if Mexican tax authorities consider that you are providing a digital service, now they are allowed to ban the access to your platform in Mexico. So how they will do that, and that's something we will discuss in the federal fiscal code. They are giving the obligation to the companies in Mexico who provide the access to internet to ban those. I would say, I'm not an IT guy, but I imagine there would be an IP address that it will be, from your digital platform, it will be banned. So when I will be in my web page in my house or in my cell phone, and if I try to access to your platform, it will not allow me to access. So imagine the impact that I might have. So it is very important to identify if you are in that situation, and if that is the case, think about register, because if not, there is a lot of possibilities that Mexican tax authorities will ban your digital service web page or application that you have in Mexico. I will explain in the VAT, because that is additional things to take care about VAT, and also in the federal fiscal codes, what are the consequences about this. Going forward, the next one, I think this is for you, Omar.
Thank you, Pepe. Now we were talking about the changes on the maquiladoras, and basically this is a point out by the tax authority. For the maquiladoras, basically we have two options in order to comply with transfer pricing. The first one is about to have the calculation of the safe harbor. That is basically that you pay taxes on the greater between the 6.9 over the total of the assets, or 6.5 over the total of the cost used by the maquiladora. That is one of the options. And the second option that you have is to apply for an APA. So some of the companies, they think that it was a third option, that is to have directly a transfer pricing study to comply with the arm's length regulation in Mexico. But the change and clarified by the tax authority is only the maquiladoras will have these two options. It's not a third option, and obviously some taxpayer abuse of this, let's say, green line that we have on the, sorry, a gray line that we have on the law. So basically the tax authority clarified that. The other important change was not in this reform for the maquiladoras, was last year around July 2020, that the maquiladoras was reduced some of the benefits when you have a VAT certification. That basically, the main changes on maquiladoras is the first one, the tax authorities canceled the benefit to get the VAT refund on expedite process. And we will see some of the changes on the federal tax code about the changes also in the VAT refund process. So basically, now all the maquiladoras that have the VAT certification will collect the money on a regular basis according to the tax code that is 40 business days. So we don't have that benefit to expedite the VAT refund anymore. So that is one of the things that is very important for maquiladoras. The other one is basically the time to reduce that the companies can have the material in temporary basis in Mexico. The maquiladoras, when they have the VAT certification, they are allowed to be the material in temporary basis 36 months. Now, in this year, it's going to be just 18 months. So be aware of this change and be careful that the system on the control, the temporary importation needs to be changed starting this year.
A quick addition to that, Omar, if I may, is just to remind companies that are in IMEX and maquiladora is that the APA is taking a long time. The Ministry of Economy in Mexico doesn't have enough hands to process all the APAs, and it's taking a long time. You know, one of the things that are said is that there are two people working with one single computer, so obviously that slows down the process a lot. So we have to consider that. So if you have an APA in process, you probably want to go ahead and apply it, but be aware that if the resolution from the SAT comes differently to what you applied, you're going to have to go back and amend those tax returns and pay interest on the difference. So it's very important to consider that. The other one, Omar, and I think you have had more experience on this than me, is that the SAT has come up with this fast track options. So the fast track options that have been sent to some maquiladoras are coming with a very high percentages to apply over cost and expenses in applying a portion of the total assets used on the process of the maquila. So I don't know if you want to comment a little bit more about that.
Yeah, so basically the fast track that we are seeing nowadays is coming with a higher percentage to use as a markup. And unfortunately, there are not many fast track, but the tax authority are delaying a lot to provide this, let's say, benefit or new arguments to negotiate what will be the APA for the companies, specifically in the maquiladora. In the last year, I'm seeing around 3 or 4 fast track. It's not too much. As Raul mentioned, they are delaying a lot to provide an answer for the APA. I have clients that applied in 2017, and it's almost 2 years to go and have the approvals for the APA and don't receive any answer or any corresponding, let's say, argument that they want to negotiate. So we will hope for next year we will have advances because the Mexican government and the US government is having a communication in order to have a new fast track. Hopefully it's going to be in this year or later on next year. So we will hope to have an answer and expedite the process for the approval of the APA.
Yeah, what we have heard, we had a new head of the Ministry of Economy, and this lady seems to be a little bit more entrepreneur. with a more entrepreneur vision. So we hope that, and that's what she has said in the last couple of weeks, is that she will change a lot of that, and she will try to expedite all these processes and try to minimize as much paperwork and bureaucracy that all these companies have to face in order to get an IMEX license, a validated tax certification, or an APA for that matter.
And just to complement, Raul, I think that now that we're talking about maquiladoras, to keep in the same concept and topic, it's important to mention that now that you were talking about disclosure of tax schemes, one of the main doubts or even things that we still analyze is that with the rules that the miscellaneous tax rule that the Mexican Tax Authority published in the last week on December, they published the specific things that we will need to submit before Mexican tax authorities when we are in a scenario of disclosure in a tax scheme. And one of these rules looks like it's including maquiladora as a way to avoid creating a permanent establishment in Mexico. So one of the things that we cannot confirm that, but we want to give you, the highlights, because this will be something very important for all the maquiladoras in Mexico, that if we conclude that we will need to report that at the end, and that's what something we were discussing, I don't think will be any issue. Mexican Tax Authority knows you are a maquiladora because they give you the authorization to be a maquiladora. You report your tax informative as Adiense, as a maquiladora. There's nothing to hide. Everybody knows that you are a maquiladora, but it's an additional administrative burden. We need to fulfill the notice, provide information. For us, it doesn't make sense to give more information on things that you already have. We are not trying, or we are not suggesting to avoid a permanent establishment. It's an authorization and a provision that is in the law, and you can apply, right? So that's something that I am aware. We are kind of confused because it doesn't make sense, but if in the meantime there will not be any clarification, we will issue, as Raul already mentioned, we will suggest our clients if we will need to do that or not. We will always be the more conservative and more prudent situation that we would advise. But have in mind that this is something that is new. Yesterday, Monday, now it's possible to begin to submit the reportable schemes. Before Monday, the web page was not, it was only informative. There was no way to put your tax ID and password to log in. Now you can. So that's something that we are reviewing the formats. We are trying to explore the web page to see what else they are asking. But this is something that I want to complement, because regarding maquiladoras, there is a possibility to disclosure this as a tax reportable scheme. Right?
Agreed, Jose. So like I said on the beginning, I think that it will be important for everybody to keep their eyes open and stay tuned. We will definitely come out with an alert, a tax alert, as soon as we learn something more about this, and we do hope that the maquiladora structure or maquiladora scheme, however we want to call it, is going to stay outside of this reportable schemes obligation. So again, stay tuned for more on that.
And just a final comment about the maquiladora industry and IMEX company. On the last year and now it started this year, we are seeing many custom review, not only for the custom authorities, but also by the local state authorities. And basically they are focused their review in custom in two areas. The first one is about the fixed asset, that you need to comply with all the tax information and custom information to support that the assets are legally imported into Mexico. And the second topic is about the review of the Annex 24 balances, that you need to keep in mind that you need to be updated on that report. So please take a look on internally in your teams that these two items can be in compliance because the tax authority are having a strong review, not only the federal, but the state, local authorities. Now, Pepe, I think
Let's go jump to VAT law. There are also very few changes. The first one is in Mexico, medical services in most cases are exempt of VAT. So Mexican government identified that there are institutions, like for example, institutions who provide also, besides of being the doctor who billing as an individual, these institutions or medical health centers are billing the service as a corporation or as a company. So in order to avoid or to keep the same line is, as long as if they are billing medical care services, they will also be exempt, because there was this difference that it has to be only provided by, we'll say individual, because you need to prove that the person who is billing that have the degree to be a doctor. That was one of the requirements to be able to deduct and to call for this exemption for VAT. So now they say, okay, as long as this institution activities are rendering these kind of services, and also who render the service is a doctor who has the degree to provide that service, also this institution can bill without VAT. So before this reform, this was not clear. They were even companies who take this criteria knowing that it was not clear on the law. Now I think this is a clarification, and it makes sense. It's at the end, the institution is providing that service to an individual. It doesn't make sense to pay to the individual without VAT, and I collect with VAT. It's not a tax symmetry on that scenario. The second change, and this is also related with digital services, until 2020, if I'm Jose, want to sell my cell phone, a used cell phone, through one of these platforms, as I was mentioned, there is one platform in Mexico very popular that is called Mercado Libre. Amazon in Mexico is not a store where you can sell used things. It's always new or refurbished. So it's not the platform that I think it will impact this reform. But now, if I want to sell a used good, this good has to be with VAT, right? So that's something that will affect, because in most of the scenarios, what I used to do is I publish my cell phone, and an individual buy me, and we make the transaction. Of course, in order that this VAT will be applicable, a collection has to be performed. So maybe if I'm only publish my cell phone in a web page, but the digital service provider is not collecting, then it will not be possible to collect that VAT. But if we review the provisions on the digital service, it is supposed that in the web page or in the applications, you need to publish the goods and service including VAT. So at the end, you can publish that, but if the transaction will be closed between the buyer and the seller, and the platform is not being part of the transaction, and it's only a way to advertise what you want to sell, I think this will be something we need to analyze, but in most scenarios will not apply. But if the digital service provider is collecting the money for the sale of that used good, he has to consider the VAT on that transaction. Before 2021, this was not this was exempt. Even in the VAT law, you have this will not apply for the selling of used or second-hand goods. So it's important also to have in mind that. And also something very interesting that regarding digital services that came out and changed the way digital service provider will became a taxpayers in Mexico was that during this first year, Mexican tax authorities realized that they are very small digital service or startups, digital service providers that doesn't have the money, the experience, the source to came to Mexico and became a taxpayer. Doing that, you need to apostille your minutes in the country of residence, translate it to Spanish by a certified translator. You need to have a tax legal representative in Mexico, an address. there are many requirements in order to become a digital service provider in Mexico. So with the experience that the Mexican Tax Authority has with the previous year, and also taking in consideration the experience of other countries part of the OECD that are now using digital services taxes, they realize that the tax burden of paying this VAT could be transferred to bigger companies who are being used as an intermediation service provider. And let me give you a very clear example. Imagine that Jose Luis developed a game, right? And he is resident, let's say, in Singapore. So imagine, well, how's the way I will buy this game that is being, maybe I didn't say that, but that game you can only use in mobile phones. So right now we only have two app stores in the market, right? It's the Apple Store and Google Play Store. So I can download in Mexico the game that Jose Luis developed, and if I buy that game, the money goes first to Apple or to Google, and then to Jose Luis. So Mexican Tax Authority now say, okay, if you have that scenario, what you can do is, Google, please collect the VAT to Jose Luis, because remember that the VAT on digital services, it is paid by the Mexican users, not by the digital provider. The digital provider, it's only an agent collector. So what in this scenario, what will happen is that Google will collect the VAT on the fee that Jose Luis paid for the app and pay to the Mexican tax authorities. So with this being said, Jose Luis, as a developer who has a very small company in Singapore, doesn't have to come to Mexico and register and pay VAT for the sale of that application that he had. So this is a new provision that is opening the possibilities for the digital service providers to use these kind of schemes. And I would say not avoid, because it's not avoid, it would say is the possibility that we have in the law and that we can call it. What has not been published is, and this is something that we are taking a lot of care, and we are continuously monitoring if there is no rule, is who will be responsible for that. Because imagine Google or Apple Store or any other marketplace that we have. I know that Huawei also have a marketplace. Like, he needs to know which digital platform will wants that they collect the VAT, or maybe the digital platform by himself wants to register. So there are no notices here. I already reviewed the tax resolution miscellaneous to see if there is any format to inform the broker or the intermediation digital service provider to inform about this way to collect. So we need to be on the loop to see if Mexican Tax Authority publish that. I'm sure that they have to be an allowance, because if they don't have ready the way to inform about this, we need to have time to meet this requirement. But as I mentioned, I think this is something good, because we'll increase the taxpayers base that Mexican Tax Authorities has regarding digital services, because now the big companies that for sure they are already registered. If you see the digital service provider list that I was mentioning before, you can see these platforms already registered. So that will be a way to simplify the process. And have in mind that this is only for VAT, right? Because income tax withholders, when we have a Uber driver, we have a rapid delivery guy, this is not applicable for them. It's only for VAT on digital services, and this is applicable to Spotify, Netflix, Amazon, Amazon TV, Amazon, the seller of goods. So have in mind that also gaming, giving lesson classes, study, all those kind of things will be applicable for this. So you can use this new scheme to use a third party in Mexico who can collect on your behalf. Have in mind that is a requirement. This platform, that it will be already registered in Mexico, has to collect the payments from your Mexican clients and then pay the VAT, and then he will transfer your money to you, as is already done by this kind of platforms. Going forward,
Let me just add something here, Pepe, if I may, and just to clarify that this is not a new thing. That this is something that has been discussed on the OECD, especially in Europe and the UK. So it's something that is already been established in those countries. So what Mexico is doing is not creating a new obligation over this type of platform, but rather just following up on on the trend that is happening worldwide, where every country wants to obviously get a piece of what these big companies are doing in their countries through electronic platforms. So again, it's nothing new in Mexico. We're not recreating the wheel, but rather just following the international trend on this type of companies.
Yes, Raul, that's a very good comment. Also, if we take in consideration the OECD comments or other countries' experience, I would like to add that I have seen that in other countries, the burden of collect the VAT or any indirect tax related to digital services sometimes is even transferred to the financial institutions. And I think that will be the clever way to do it, because the financial institution is the first step on the on the workflow of the money. So, of course, in Mexico, we have a lot of compliance for financial institutions. That's why we have big buildings here in Reforma, that they need to accomplish all the compliance that financial institutions have in Mexico. So adding on top of that, that you need to collect all the VAT on digital services that you have on payments, I think it's something that we will take time, and that's why maybe Mexican tax authorities are not taking that approach, because I know that other countries are taking that approach, but I'm sure that the financial institution have more technology or are more prepared to do this.
Yeah, exactly. And on the beginning, right on the beginning, when all this began, there was a mention of that on trying to do this through the banking institution, and that idea just was thrown away because it would just it would just mean a lot of paperwork, and it would be just impossible, and it will take years to be able to put in place.
Correct. So, but I would say that might be a possibility. I think we have a lot of advance in how the finance institution in Mexico are approaching to technology. Now we can pay with cell phones. We can, maybe in the future will be something very easy to identify. But since they have a lot of anti-money laundering law compliance, imagine, adding that this money was VAT, it was not for other sources. There are many things that I think they were the main reason why they didn't decide to go this way. Yeah. So, well, now we have this option, right?
I think we have enough changes from now, so let's leave that for the far future.
Yes. So just to close that point, in Mazar we have helped many digital service providers to register, to collect the VAT and to pay. We have a lot of experience in that. So if you have a doubt, or you think that you might be considered a digital service provider, please let us know. We can help you to define that, because the consequence, as we already mentioned, and we'll jump into the next slide, where we have again the same consequence that I was mentioning in income tax withholding, is that you will be banned. Imagine that, right? Imagine Mexico is a big market. I am aware of that. I have a lot of recently, I received a lot of contact from residents abroad who are interested in digital service provider in Mexico, because we are a big market. We are one of the biggest markets in Latin America of consuming digital service products. So this is something that we need to take care, because I would say that I haven't heard anyone yet to be banned. I think government will take time to even identify the way. And that's something that we were discussing with tax colleagues, how Mexican tax authority will know which digital service providers have been rendering in Mexico. It's a huge work to do, but I'm sure they will begin I don't know if in the future there will be a digital tax service informative. Let's not give ideas, but we need to see how Mexican tax authorities will know. And the way that they will know it with the users, and the users are companies or are individuals. So let's see what happens. There's nothing there, but again, the consequence of being banned it's important. Also, there is a possibility to be unbanned. If you get banned, then you can amend that and then begin to provide services again. But the consequences are there. So I think we can move Jose Luis and Omar to the Federal Fiscal Code.
Thank you, Jose. On the changes of the federal tax code are, well, kind of complicated. As you can see in the VAT, in the income tax law, most of the changes are clarification, but in the federal tax code, definitely it is another story because they are trying to clarify something, but adding more, let's say, holes on the taxpayer. The first one is about legal acts without business reason. This is a tax reform that was on 2020 bill that basically, in order that you have a benefit or operation in Mexico, you need to have a business reason. Without that, maybe the tax authority can disallow the deduction or try to get something questioned about what you are determining your tax profit. So they clarified that if you are done a specific deduction without a business reason, the consequences are only to pay taxes, not be a criminal nature. And this particular case is not a case that you can have a prosecutor and be considered as a criminal action. This is very important is in the Article 5A. This is a new article. And now the tax authority, for example, when you are applying for a VAT reason, they want to know what are the business reasons that you have obtained the VAT receivable. So, for example, I have questioned by the tax authority when I apply a VAT refund, why instead that I buy a land to construct a warehouse, why I didn't rent it. So they want to know what is the business reason because I bought this land to construct the warehouse. So that is one of the things that the tax authority are applying, and they are, let's say, question most of the big deduction that the companies have. And this is a reason behind this is basically they want to have more information and need to have more knowledge about taxpayer because unfortunately some taxpayer abuse in VAT records in the past. So this is an important thing that needs to be considered, and it's basically a clarification for you have a business reason when you have deduction or you have businesses in Mexico. The other change.
Let me just add something, if I may, Omar. You know, this need to have substance on every transaction that we make is definitely important, and it's for all Mexican transactions, but also for intercompany transactions. So there's a lot of companies that had intercompany transactions going back and forth, and a lot of that has to do with management fees, for example, or it has to do with royalties, or it has to do with technical assistance and things of that nature. We have to have substance behind all that. We have to have supporting documentation that builds your case. We cannot make things just out of the blue, just to take a deduction in Mexico for those intercompany charges. So if I give you an example, if you're going to have, for example, intercompany charges, because your team in the US is doing a lot of the accounting work, for example. Well, you have to prove that your accounting team in the US is actually doing that. So you may have to gather, timesheets, detailed explanation on what exactly they're doing. So that's the type of documentation that you need to have in place to be able to, put a substance and supporting documentation, behind that transaction. So again, that applies not only to Mexican transaction, but to this type of intercompanies type of transactions.
And not only that, and thank you, Raul, for the comment. They will ask you if you have, for example, in your budget, you already include that deduction. If not, they can be questioned also. So be very careful, because maybe there is something that you didn't project on the past that the tax authority can question also. So going forward, one of the other changes is about the tax mailbox inbox that they have to have contact with the taxpayer. Basically, it's a specific clarification, because in Mexico we have different time zones, and basically one of the change is that the central zone is going to be the time to be the notification of any notice that is in the mailbox. The other change in the federal tax code, and this is very important about the installment sales. This is something that is not new. Basically, that is in the past, and I think more than 4 years. And basically, that regulation establishes this obligation. When you have installment sale, you need to issue one invoice for the 100% of the total price that you will pay to purchase a product or a good or render a service. But unfortunately, what happens is the taxpayer, instead to issue that CPI with 100% of the amount that you will receive it, they only invoice the installment sale. So what's the confusion? What would be the correct procedure for that? And now the tax authority include that in the federal tax code, that if you have installment sale, you need to issue, besides the 100% of the sorry, to include the 100% of the sale, and not only that, you need to also invoice the installment that you will receive it, depending the time that you will collect that money. So that is the clarification. As I mentioned before, this is not new, was on the regulation of the miscellaneous rules, and right now it's just to clarify that you need to issue both the installment and the 100% of the service or the purchase of the good.
Yeah, and just to complement what you say, Omar, and this is very important, because I think that it looks like a minor change, and take a look that if we go to the corporate income tax law, one of the requirements to have a expense deductible is to meet the federal fiscal code requirements of CFDIs. And now with the amendment of the federal tax code, if you have a sale that it will be in installments, you need, as Omar mentioned, the full invoice for the whole transaction, and then you have to issue 3 or 4 or 6 installments that will cover the full amount of the invoice. If you don't have those installments, and if you don't issue the full amount of the transaction, it will be not deductible, because you did not fulfill the federal fiscal code requirement. Before, as you mentioned, it was like looks like an option that we have in the tax miscellaneous. It was not that, that straightforward, but now for me it's very clear. So take it seriously when we say, because many taxpayers are used to say, keep the 50% up front, and when we finish the service, we pay the other 50. That is installments. So since the first moment, you need to issue the full amount of the invoice, then you will issue an installment CFDI for the 50 when you get the money, and the second one when you pay the remaining balance. If you did not follow that, the consequence is that it will be not deductible. So take this seriously, and Mexican tax authority now have the right to deny this. I think in our experience, We know that there were clients that were not meeting this requirement, but at the end, since it was in a rule, sometimes it's not that clear, but now for me, it's very clear. And that is something that I advise to my clients, that when we see this kind of operations, we need to fulfill this requirement for sure, right?
Just a final comment on this. You may think that you are duplicating income if you issue the 100% of the invoice and then the installment. No, it is a procedure in order that the issue of the installment invoicing, you need to include some specific number that is going to be linked to the 100% invoice. So in that particular case, you are not, let's say, duplicating income on this installment. So as Jose mentioned, please take a look at this new change and issue correctly when you have this type of sale internally. The other change in the federal tax code is about this spin-off, and basically it's a clarification that in Mexico, the spin-off is considered as exempt sale, but the government detected that when that happens, some taxpayer after the spin-off, they change or include some account in different balance sheet areas. For example, they create in the equity a new account, including something that is going to be transferred on the spin-off that can trigger an additional payment to the shareholder. So basically, the tax authority realized this type of, let's say, abuse by the taxpayer, and they put that if you have a spin-off, you need to maintain the same balance sheet before the spin-off and after with the same, let's say, financial statement information. You are not creating a new account that can trigger an additional payment to shareholders. We will move to the next slide. This is also an important change, and it's the cancel of the certificate to issue invoices. This was also not new in the law, was also in the past. But one of the additions is you have transaction with companies that issue invoices without, let's say, falsificate the CFDI. The tax authority can cancel the certificate that can not help you to issue invoices for your services. The other thing is if you also transfer simulated tax losses that are not in your books or not, are not in your tax return, that assumption also can trigger the cancel of the certificates to issue invoices. This before this reform, the repercussion is that you can suspend the digital seals for invoicing. Now it's submitted that part, and now it's going directly to the cancellation, and you need to apply for new digital seals, and also you need to start all over again and explain the situation with the tax authority in order that they can allow you to have again the digital seals. So it's very important that you can consider this change because it's higher the let's say not the penalty, the consequences to not have or not have or have deducting losses that you don't have. Means of contact. This change on the federal tax code is important because nowadays you have to have in your mailbox 5 different people with contact with that email to send notices through the electronic mailbox. But besides that, the tax authority now include that is besides the email, you need to provide a cell phone number that they can send you text messages for any notice, communication, cancellation of some invoice, any internal communication between the taxpayer and the tax authority not only will be used by the email. Now, it's a common way that you will receive text messages in your cell phone because you will provide now your cell phone information. So this is very, very important change. About the tax refund, we have some specific changes on the process that we have with that tax refund. Besides that, we discussed on a few moments ago about the maquiladoras. And specific is if you apply for a refund, it's a common way that the tax authority, before they start the process of the review, they send some inspector to review if you are in the tax domicile that you are reporting in the tax refund format. If you are not, let's say, localized, or if they knock in the door and nobody open, or the person that is asking if you are the taxpayer is there and say no, that is going to be under the fault that the tax authority can cancel and not have any refund as being filed. So basically, will not be proceeded to review the information that you apply for the VAT refund. This is very important, and it's an internal thing that you need to consider when you apply for a VAT refund, that someone in your office is going to be available to receive an inspection or an auditor to mention that your tax domicile is there. Going forward with another change about the tax refund requirements. Now, the normal procedure right now for the VAT refund process is when you apply for the refund, the tax authority has 20 business days to request an additional requirement information. And after that, you have an additional time to answer. But if the tax authority determines under their review that they don't need to issue an additional requirement information, instead of that, they can go directly and audit your books and your records to review that the refund that you are asking for is going to be completed and all the information is under the way that they want to see it. So basically, they can go and audit your VAT refund process, and they have 90 days in order to close that audit. And the change on the federal tax code mentioned that after this 90-day process of the audit, they detected that you are okay and you comply with all the requirements. They can notice that you have only, or the tax authority have only 10 days to deposit the amount that you're asking for the rate. So that is basically the change. So so that is only applied when you have the audit directed by the tax authority. On the other way, you have the normal procedure that is 40 business days to have an answer, positive or negative, to receive an audit from the tax authority that you have authorized the VAT refund. One of the other changes is about jointly and several liable parties for the transmission of simulated tax losses. So basically, this means that if the partners of the shareholders of the company that acquires or deducts simulated tax losses, or you buy a company that has tax losses and you want to apply tax losses, both the company and the company that has the tax losses can be liable, as long as the company has said to form part of the group of which is belong. So this is an important change, and be very careful when you have these tax losses and you want to apply it, and well, you'll be liable not only if you acquire or deducted that losses, the other company that also originated that losses is going to be liable. Now I think we jump to Jose Luis.
Yep. So just going one step back, and thanks for that, Omar. I think that's something that is also important to consider here for the tax refund requirements. It is that we had cases before when we, as Omar mentioned, filed different periods of a single tax, and we were facing that we have only 10 or 20 days to answer 5 or 7 requirements at the time. So this is something that probably it is going to be helpful, because sometimes they were asking in each one of the requirements the same information. So now that they are going to be issuing a single requirement for all the periods that were entered, probably is something that may expedite a little bit the reply to the authority. So that's something that I just want to add here. Now moving on, another change that we had for the federal tax code, it is that we have a new scenario where the company, where the tax authority, it is going to be considering the taxpayers under a suspension or a reduction of obligations. And this will happen if you have an entity here in Mexico that have 3 continued years of no operation, so they do not issue any invoice and they do not receive any invoice from suppliers and vendors. Well, the authority there is going to be monitoring the activity of each taxpayer, and if in the 3 previous years they do not have any activity, they will automatically suspend that specific tax ID. And what does this mean? When it is certainly a benefit for the companies in the sense that this suspension or reduction of obligations represents that these specific taxpayers are not anymore obligated to file monthly and annual returns during the period of the suspension. But right now, well, this, as I mentioned, it is going to be something that came in a good shape for a lot of clients that does not have operations here in Mexico from a standpoint of the compliance. However, we are still missing some rules and specific regulation on how this is going to be carried out. So right now, we do not know how the authority is going to be notifying us, how the suspension is going to be taking place, and how the taxpayer, once they consider that it is going to be starting operations here in Mexico, well, how they will be able to file the activation of this tax ID. Something that it is also important here to consider, this is that this suspension of activity, that it is also known as the dormant entity, it is not new. Previously to the reform, it is something that taxpayers can also enter and request manually to the tax authority, but now we have that it is going to be in an automatic manner after this specific threshold of years of non-activity. But just to keep into consideration that option of entering and requesting the dormant entity status in a manual manner will still be there and available. So moving on as well in the federal tax code, another change that we have, and this is related to merger and liquidations and this kind of processes of this nature, that it is already stated in law prior to this reform, the process and the form of how the taxpayers should request the cancellation of the tax ID or the federal taxpayer registration number before the authorities. So in the same manner of trying the authority to add more control and more filters on these kind of processes, they add up 3 additional requirements that these companies shall meet in order to request this cancellation. The first one of them, as we can see here, it is that the taxpayer that it is going to be liquidating their tax ID cannot have any review process open by any means by the tax authority. So if you have an audit or any other review from the authority that it is not concluded, you are not going to be able to request this cancellation until that matter it is closed. So this makes sense because it is pretty much saying that you cannot disappear if you still have pending items to be clarified before the tax authority. So I think that it is also came in good shape here. And that's the first item. The second one, that it is also related to compliance side and to prevent and have more control on these kind of transactions. It is that the tax authority, as we were previously mentioned, has already a specific list of those all those entities that they have already identified as entities and organizations that carries out simulated transactions. Here they have the acronyms of EFOS and EDOS, but pretty much it is companies that issue invoices that are not for sales and companies that deduct those invoices. So the authority is adding in this specific part of the law that in order to request the cancellation of your tax ID, you cannot do it if you are listed in that specific list of simulated transactions companies.
Just
And the last,
Jose Luis, sorry to interrupt, because this is very important. And I think now that when we jump to the outsourcing possible reform, one of the possibilities to go out of any labor contingency, if that will be the end conclusion, is to merge the operating entity with the, with the insourcing entity that they have. So before even think about you are going to that, many clients has approached to me, and I always say, many people are thinking about the labor consequences, but nobody is taking a look on what would be the merge, right? So these points that you mentioned are very important. On top of that, because I know that we are speaking to foreigners about this, merge in Mexico might be considered a sale of shares if many requirements are not met. So unfortunately, I have clients that has approached to advise, and they say, we decide to go to a merge due to the labor. I think there's no time. We don't want to wait more. We want to do that immediately. And they never thought that that merge will be as consequence considered as a sale of shares in Mexico. So that's something of the things that you need to take care before taking a decision of a merge, because that may, as a consequence, a corporate tax has to be paid because Mexican tax authority will consider this as a disposition of shares. Just to close that point, we are focusing on tax, but also one of the things that will came when we are in that merge is that if you have labor suits or or some even union issues, I would say that's not the case, but it might be. Please ask your labor advisors what will be the consequence of merge, because then the exposure and liability will pass through the new entity who survive to the merge, right? So that's something very, very important also to have on mind, because now I'm sure that we will be facing many merge or even liquidations, because there will be companies that will decide to liquidate the insourcing entity. If we conclude that, as I mentioned, it's not that we are advising to go for merge or to liquidate. First of all, we need to be sure what will be the labor approach from the Mexican labor authorities, right? So have that in mind, and these new requirements will be something that could provoke that the merge will be not authorized by Mexican tax authorities. Okay.
Yep. Yep. No,
just an additional comment, Jose Luis.
Yep.
Now the government have a program going to the companies that we call factureras, that basically is that they simulate invoice transactions without any support. So, and they go after these companies because they are creating some consequence on not paying taxes. And not only that, so also they are focused on the companies that they are deducting those fake invoices. So maybe you are not, or you are in that list and you are not aware of that. So it's very important that internally the company review that they are not in that list, because sometimes we are just focused on the first list, that the company that issued the fake invoices, but not that you are making the deduction. So be careful about that. because that can trigger this kind of consequence that maybe the merge will be considered as a sale, as Jose mentioned before.
Yep, and those are very good points because, well, as you can see, this is adding certainly more complexity on carrying out this kind of transactions. So it is really important that we keep close track of all these new compliance and regulations, just to see that we don't trigger anything that it is going to be not helpful for the company. So the last point that we have here for the cancellation that was added for the tax ID, it is that as well companies should be sure that their tax installments, for example, match the database that the tax authority has. So this is something that we will see as well in the following slides, but all that tax installments and the tax authority already know how many invoices you have issued because they are issued electronically through them. So they know that, for example, for January, you should consider it as taxable certain amount at least of income. So if they see that you are going to be liquidating a company and that you have issued invoices, but you have never filed a tax installment, or the tax installment that you have filed are for different amounts for those that they had, well, certainly it is going to be a new reason for them for stopping this cancellation. So that's also something important that we should keep in control. So moving forward as well in the federal tax code, well, some of the important changes that we also see, it is regarding the keeping of the books and records of the company. So what does this mean? Because prior to this reform, we still had the keeping of books and records for certain periods. That was 5 years for normal accounting and transactions of the company, or 10 years, for example, if we were applying losses against the profit of the company. So this new addition in the tax code mentioned that we have certain scenarios or activities that companies can carry it out, that now they will need to keep for a longer period that information. These scenarios can be, for example, capital increases or reductions. And what information we will keep in these cases? Well, we will need to keep, for example, the assembly minutes of the shareholders that approve that increase in the capital. We will need to have the financial statements that support that movement, and these shall be kept by the company as long as the company exists. So it is pretty much going to be for the life of the company. This different to the prior regulation that mentioned that only 5 or 10 years are the time that you need to keep the books and records of the company. So I think that this is going to be taking special importance, for example, for entities that have a lot of years of operation, and it was something that we face normally in some companies, that we were trying, for example, to realize any particular transaction, and we try to go back to movements of the 1990s or prior years, and we do not find any of the information that support those transactions that we see in the financials, because according to that regulation that was in place, well, the company was not obligated to maintain that information. Now it is stated in the law that if you have capital increases or reductions, you will keep all that information for the time that the company subsists. So this is important to keep in mind. It is not for that as well kind of transactions. We also have, as we can see here in this other slide, that in a similar manner and in the same fashion, for those companies that carried out mergers or spin-off, we will need to cap as well all the information as support. And this information now also includes, for example, tax calculations. We have something here, some 2 specific accounts that I will say that are the net profit account, known as COFIN here, that it is the account from the company can pay dividends to the shareholders. So it is looking into this, that if you are going to be paying dividends in the future, you can have all the support documentation of how those dividends were assessed and calculated by the company. So this is new. This was not considered previously before 2021. So it is going to be important that as an internal control of the company that we can keep all the support and documentation of these kind of transactions. As I say, capital increases or decreases, mergers, spin-off, so we can support exactly how our equity and later on in the future payment of dividends are being calculated and assessed.
Just to complement what you say, Jose Luis, because this is very important and this is something that we face a lot. Every time that we want to, when the companies approach to us and say, we're gonna pay dividends, could you please let me know or make the figures to see if there is any tax, or we're gonna sell the shares, and in Mexico there is a possibility to give a basis of the disposition of shares, and that you need to determine the cost of those shares with a specified tax procedure in Mexico. So we all usually face, when we ask, we need to consider the tax attributes. There are tax losses, there are tax profits accounts, you know, the capital or equity. So it is very common, as Jose Luis mentioned, that we don't have that information because it's very old. So we need to be sure that for now and going on, keep it that. You need to keep it, and when we need to keep it, as if there is an increase of equity, as well. So we already mentioned, you need the minutes, you need the transfer of the money, because sometimes it's in another currency, and Mexican tax authorities will go to see when that happened, to see what was the exchange rate. So those kind of things, I will say that it is very common that from a legal perspective, lawyers keep that record, but they always keep the record focusing on the minutes, not on the complementary information that it is needed for this situation. So now, part of the things that we are requiring and advise to our clients is that keep in mind this, since we will ask that. So if we don't have it, now we are not accomplished one of the federal fiscal code requirements on what is accounting. So there might be a possibility to get a penalty, and as a consequence to deny or to do not consider that situation happens. We don't know how this. Of course, I think it will be very extreme to say that authorities will not recognize the transaction, but there might be some implications, and the procedure will be more complicated than if we have it.
Mm-hmm.
Right?
Yep, absolutely. So, okay, yeah. Another changes that we see as well in the federal tax code, it is that, for example, regarding the tax opinion that it is being issued by the auditors on those companies that are being audited, it is that prior this reform, the CPA, that was the auditor that signed the opinion, can grant some sort of powers of attorney to his team or to other members of a third party that can go before the tax authority in case that the authority have questions and doubts on the opinion. So they are not going to be, well, they were not the ones obliged to answer directly and to have the conversation with the tax authority. So they have that benefit, the auditors, of granting that POA, we can say it, in order that someone else can clarify any question that the tax authority might have. Now they changed that, and the law says that now the CPA, the auditor that was the one signing the tax opinion, he should be the one, and only him, the one that can answer any questions or doubt that the tax authority can have. So this is something that we can certainly shall keep in mind, just to be aware of that. And another important change that we can see here, it is regarding the transfer pricing fines. And these fines prior this reform, for example, if we have a non-compliance and on any obligation related to transfer pricing, and the tax authority noticed that, they will be they will be imposing a specific fine. However, we were able to obtain prior the reform a 50% reduction over that fine. Now with these new changes that we have had and the reformation of this article, if we have a non-compliance of obligation that has not been filed before the authority, we are not going to be able to request for that reduction on the fine that it is going to be imposed. And also it is important to consider that it is going to be considered as an aggravating fault to the authority and the consequences that might trigger. And related as well as something that Pepe was mentioning prior in the other slides regarding the digital economy, it is that the federal tax code, it is now considering a specific fine for the telecommunication services providers, that it is not the technological platforms, but instead the network suppliers for these platforms. So this fine, it is mentioning that once they receive, for example, the notice from the authority, that that the authority have identified that one of the telecommunications or one of the digital economy taxpayers needs to be blocked here in Mexico, as Pepe was mentioning. If they don't do that in 5 days after the notification of the authority, well, the network suppliers will be obtaining as well a fine of that can go from 100,000 pesos to 1 million pesos. So this as well, we don't have the specific rules and regulations on how it is going to be taking place, but certainly something important that we should keep in mind. The other part that we are going to be seeing here in the presentation is the most important changes that we consider from the miscellaneous tax resolution. So here we are included the main rules that have changed that we consider that are the most important ones. And the first one, I just want to mention it real quick, that Pepe, as well as we mentioned in the presentation, we now have the obligation of withhold a 6% of VAT for all those companies that are an outsourcing company. Prior to the reform, the only regulation that we have, it was that we filed that as taxpayers at other withholdings, but now with this new rule, and this is more a technical matter, we have a specific form that we need to fill in order to file and pay those withholdings that are being carried out for outsourcing services. That's for the first rule.
I will say is a concept. Besides of paying just a straightforward VAT withholding, now it says VAT personal service withholding, right? It's like the description change. It's only a technical way to submit it. So be aware that since January, installment or withholding, actually since December, it was mandatory because the miscellaneous tax rules are applied since the moment they were published. So December installment, when you pay the withholding of this VAT, you have to use this new concept. So if you didn't do it, you will need to amend the installment you already did. Right?
Yep, correctly. Now, as Pepe was mentioning, it is a segregation of that specific concept, so we can have that withholding fully identified. The other rule, it is the one related to the provisional payments, and this, as I was mentioning, now the tax authority have all the information of the taxpayer. They know how much invoices you have issued during any specific month, how much withholding you have during the period, and how much you should be paying them, at least for those concepts. So this rule, it is just saying well, once again, that every tax installment that we are going to be filing, it is already preloaded with that information. So the authority is trying to give us the information that they have in order so we can match it and prevent any misfiling of the information, so we can have a good record of these are my incomes, this is what the authority have in their system, so that I can know how to match it and that my information it is aligned to them, just to prevent any additional questioning or receiving invitations from the authority requesting additional clarification because their information does not match with information that I am filing. So they have this rule, but they are saying that, okay, I want to prevent that. So you will have that, for example, if we are going to be paying January 2021, we are going to be entering to the system, and the information, it is only going to be there already preloaded, so we can validate it, adjust it if necessary, according to the tax regulations, and file the information and it should be filed.
And one additional comment, Luis. This is something that was already in the past, because the tax authority already last year, they did that on the annual income tax return. They preloaded the information according with the CPI for the income that we issued. In addition to that, we have audit, or we have electronic audit from the tax authority, having matched the information that we have on the CPI against the information that we put it on the monthly income tax payment. So this reform is going to be under that way. And they are also reviewing information about the electronic pay slip that we do for our employees and we issue for the employees. They want to match the information that issued there against the actual withholding or the income tax that we go to the employees. So it's two different reviews that they are doing, and they are now preloaded on the monthly income tax payment.
Correct. Yep.
And just to finish, because we still have 15 minutes to finish on time, there are other 3 new rules that are related with sale of shares, or submitting a notice before Mexican tax authorities when we have changes on the shareholders of a Mexican entity. Remind that there is a possibility to ask for authorization to do not pay any tax as long as the shares keep in the same group. So that there is a possibility to ask for a deferral of tax as long as the shares keep in the group. So what we have now is there are 3 new notices that we need to provide Mexican tax authorities. The 3 notices are related. First one is, if I'm a Mexican entity and I sell shares and I have a loss on that share, I can deduct that share among my incomes, but you need to submit a notice that you will deduct that loss. Okay, before that this was not a requirement, so have in mind that is a possibility. Second one is that if I am submitting a restructuring authorization, because when we have a restructuring deferral of tax due as a disposition of shares, you need to ask an authorization from Mexican tax authorities. So on top of that, we need to make a notice, and this notice is related specifically with let know the authorities that the entity who is a resident abroad is not part of a tax haven regime. When they pay a lower corporate tax rate than Mexico, they don't pay any tax. So if you are in those countries, Mexican tax authorities will not authorize you the deferral of tax of their organization group. So this is like a way to formalize that you are informing them that you pay a corporate tax in the country of residence and that you fulfill the requirement to don't be considered a tax haven for tax purposes in Mexico. And the last one is when we have to pay a tax derived from the gains of shares. Sometimes what we usually do is we have a tax report to determine a profit, or we pay 25% over the transaction. Also, now we need to inform Mexican tax authorities that we are obtaining a gain and that we are paying. So there is a new notice to be considered. This is something new. So have in mind that also for future transactions. Going forward to the next slide. I don't know why. Okay, so just to close the 2 points, and I will go straight to the main one. I think many clients will apply is, since 2020, it is mandatory for taxpayers that if you are gonna capitalize liabilities, you need to have a certified opinion by a Mexican tax accountant that validates that liability is real. Most of the time, this is something that auditors in the process of the auditing, they ask a confirmation of balance to the related parties abroad just to see that they have the same amount in books, and they try to keep some, materiality or essence of the transaction. So now, this is very common that clients on a quarterly or an annual basis, when they are, and sometimes at the beginning, company needs, money to begin to work, so they are injecting this money as liability, and in some period they decide to change that liability as an equity. When we do that, we need to have this certification, and this is something new, so it's a requirement. So if we get challenged by tax authorities and we do not have this certification, they will consider this not as an equity. And again, that will be interesting to see what will be the approach from Mexican tax authorities. Because from a legal perspective, I have a minutes of meeting that validate that this is equity, but from a tax perspective, I didn't fulfill the requirement of the certification by an accountant. So they might trigger a penalty, but of course we always suggest to meet this requirement to have the certification from a tax certificate auditor in Mexico. Also, the last one is tax report in Mexico for 2020 will be due on July 29, and if you can submit it before July 15, the taxes has to be paid. That would be, if I have any difference, the taxes has to be paid on July 15, but tax report can go until July 29. So that would be July 15 will be my deadline to pay any difference that part of the tax report consequence we identify, and the report can go until July 29. So with this being said, and just to close the loop, I just, before going to the outsourcing, just to, as Raul mentioned, the tax scheme webpage to disclosure taxable advice or benefits that taxpayers applied during 2020 is now available. Also, as something that we identify is that for the oil and gas industry, as you are aware, there is also a benefit for them to avoid to trigger a permanent establishment if individuals from abroad came to render services in Mexico related with the extraction and exploration of the hydro industry. As long as they don't stay in the country more than 30 days, 30, they will not trigger a permanent establishment. And this is a rule that is specifically in the hydrocarbon law in Mexico. So reviewing the ruling that I was mentioned regarding maquiladoras, if I review the ruling that appears in December, it looks like avoiding the constitution of a permanent establishment due to a ruling that we have specifically for the hydrocarbon industry, then it looks like we need to report those situations. And then the most interesting thing here is that who is avoiding to create a permanent establishment is the supplier of that individual that was in Mexico, not the Mexican entity. But if we are acting with a related party, if I am subcontracting a related party coming from abroad and he is applying that disposition to only stay in the country 30 days to not trigger a permanent establishment, then it might look that I will need to report on me, the Mexican entity, because I'm only responsible for that. And also in the Federal Fiscal Code, it's very clear that they say that when you are carrying forward an activity with a related party and he is avoiding this situation, then the Mexican entity will have to report it. Again, I think this is something that Mexican tax authorities and also the industry of hydrocarbons are aware of this. So it's a very good point that we identify. I already approached send this issue to my clients that are related to this industry, just to confirm or to have a double second opinion, because this is something that, as you know, is new, and we want to be sure that we have to report it or not give additional information if it's not needed. So it's something that is there. As Raul mentioned, we are willing to have another seminar just focusing in tax schemes reportable. We will let you know. The due date to report any scheme until now is February 18. If you have any tax benefit during 2020, it's supposed that you have 30 days after the year end, because we have a transitory disposition that transferred the obligation until January 1st. So the first week of January was holidays before Mexican tax authorities. So those days doesn't count as a working day, and also next Monday is a national holiday in Mexico, so will not count as a working day. So we identified that the due date to report the first taxable schemes will be February 18. So we still have time, but that's why the urgency to inform. We cannot do anything because until this Monday, the webpage was available, and we have now enough information to know what we have to submit. So that's why we are working on that. You will hear news from us soon. And I see that Raul jumps because this is something important. And we have 5 minutes just to give the outsourcing topic, Omar, Raul, that is like to close that, right?
Yeah, go ahead, Omar.
Yes. Just a little background about this, and it's very fast. This reform on the outsourcing, as Raul mentioned during the presentation, is still a process review in the Congress. Last year, the president of Mexico mentioned that they will be changed on the outsourcing schemes, but it's not new. That also happened in 2019. They showed some changes specifically that are very good on that time, but now they are modifying in dissertation of what will be the changes. Now the main point that they are focused is that they will be allowed the outsourcing just when you have some specific specialized services, not that you outsource all your workforce that you will have in your plan. Now they are thinking that in order that you have a very control of the outsourcing companies, there will be a national register, let's say, platform that you will have all the names, all the outsourcing companies. There will be also a limitation that the HR companies can be allowed to outsource their services. And we don't know what will be the tax effects. Obviously, it's not only a change that will be affect the federal labor law, but affect another law like the income tax, the VAT, because right now we have VAT withholding on the outsourcing services that is 6%. So we don't know what will be the final outcome on this new bill that we will have in the next month. As Raul mentioned, we will have a complete seminar about these new changes that will be this issue in the next month, and we will inform in advance what will be the final resolution about this and what will be the effect that we will have on this specific change on the outsourcing.
Correct. So yeah, so one final thought on this to keep in mind, and because I know it's one of the biggest concerns on having the insourcing structure going away is a profit sharing, which with the insourcing structure allows you to manage it. So having something like that going away, it puts you in a situation where all your employees will be on your operating entity. So the private sector, they are pushing for a ceiling on the profit sharing, which they will probably lower down the rate, which right now is 10%. So it may go to, I don't know, maybe 5% or something. But not only that, what they are proposing is that there's a ceiling to how much profit sharing you could pay to someone. So what they want to do is put in that ceiling and saying, okay, so person that have a salary from, ranges from, I don't know, I'm just going to give you a number, from 25,000 pesos to 75,000 pesos per month, they're going to have a ceiling of 2 months of profit sharing. So they cannot get more than 2 months of profit sharing, regardless of what that 5% represents out of your net income. So that's what they're looking at. And like Omar said, we're going to be talking more about this as soon as we have new information coming from the government. So that wraps it up for our tax reform presentation. I don't know if there are any questions out there. Pepe, Jose Luis, Omar.
Yeah, I here, as we mentioned in the beginning, there is a section of questions. Please feel free to ask. I have a couple of them. Let me read the ones that specifies what I talk about it. One of them is talking about the certification of liabilities. As I mentioned, we need to have a certified published accounting who certify those liabilities. They mention when we need to have that certification and if we have to send it to the Mexican tax authority. So that's a good question. The reality is that the rule mentioned that you only need to keep it as a way of proof that you follow that requirement. Until now, there is no way to submit it. You need to also, when you read the rule, what it's mentioned is what does this certification of balance has to include. Like, there are some bullets that you need to put the tax ID of the company. Like when we are promoting a refund, a writing, a notice, you need to have that. You need to be signed by a certified public accountant in Mexico, and you need to keep it as a way of the accounting that will be part of your capitalization of equity. So there's no way to submit it. The only way to do it is do it and keep it. I would say that is very similar when we are talking about transfer pricing study, right? We have the transfer pricing study there, and if Mexican tax authority asks it, we keep it, but if not, we'll stay there, right?
Yeah.
So
Keep it on
it will be the same situation. I don't know, Jose Luis, if you have questions from your side.
Yeah, I have one here regarding the dormant entries. How much time are they considered as dormant? That's a good question because this new regulation does not mention how much time it will be considered as a dormant entry once the authority suspend the tax ID. However, what we have it is that if you enter the dormant entry filing manually, it is for a period of 2 years. It can be extended after that period for 1 additional year, but that's going to be it. So normally, dormant entries here in Mexico can be only under that status during 2 years, plus 1 additional one if needed. But the regulation right now does not specify how much time it is going to be considered as dormant if the authority make it that way.
Very good. Very good. Omar, do you have anything on your side?
Yes, I have one question regarding the mailbox. And the question is, what about if the mailbox email are not updated, and what is the procedure to update this information? Well, basically, the answer is that you need to go online on the SAT website and include the new and verify that you have most of the people on financial that have that email available to receive any notification from the tax authority. That is going to be using your field or the STIEC, that is the specific tax code to enter to the SAT services.
Okay.
Okay. Very well.
Okay.
So I think we're going to have to wrap it up. That's the time limit we have. So please, if you have more questions, send it to us. I believe you have our contact information, so feel free to send your questions via email to us, and we will be happy to answer them as quickly as possible. The session was recorded, so we're going to make it available to you. So if later on you want to go back and revisit some of the topics that were mentioned here by any of the panelists, you should be able to do so. So that pretty much wraps the session. Thank you everybody for joining us on this tax reform 2021 presentation for Mexico. And please take care of yourself, stay safe, and goodbye.
Thank you.